Good evening, sir. Thank you so much for joining us here on Dateline 5 p.m. We are discussing about the current situation that has increased a lot of fear in the US economy. It has sent ripple effects, and the investors are also worried. The normal people, the common people are also worried. Cost of living crisis is under question. Please help us understand the threat. What if it falls?
Obviously, the United States is world's largest economy, and any disruption in that largest economy of the world has ripple impact not just within the United States but around the world. So there are going to be financial costs, there are going to be likely political costs, and of course the goodwill costs. You mentioned about possibilities of soaring unemployment. The estimates are that this could mean about 8.3 million jobs losses. Estimates are also saying that in worst case scenario, the stock market could tumble as much as by 45%. I think gold prices could also go soaring. So it's going to have multiple impacts in that sense in case that default ultimately happens, which is going to be in the beginning of June. But history tells us that invariably, such kind of face-offs, stalemates have been resolved over a period of time. And until that is resolved, there are ways and means how the Biden administration, without invoking 14th Amendment, can deal with some of these situations. For example, the first thing they would usually do is start shifting money between various heads from one head to the other. It could also begin to scale back some of the investments, for example, of pension funds. It could start really dealing some of the payments in healthcare and other sectors. So there are technical ways of managing or fundamentally buying time. And I assume, like in most earlier cases, such a kind of standoff would find some way out. And we all know that tomorrow, Tuesday, President Biden is going to have a meeting with some of these congressional leaders. And some indication could come out from there. We have seen that, as you mentioned, I think in Obama administration in 2011, and that was one case where President Obama had to really roll back some of his social security spending. And of course, there was enormous criticism of that kind of soft approach to budget sanctions. So let us see how it works out. But I think there are also pressures of already the US is moving into the 2024 presidential elections debate.
Absolutely.
So a lot of these pulls and pressures will continue to work, but I hope they'll find a solution later, sooner than later.
Absolutely. Now, taking their learnings from the 2011 incident, which was of similar sort, and now also considering the fact that 2024 elections are just around the corner, and we are not having very positive reports about US President Joe Biden and people in favor of Joe Biden. Now, with that situation, what do we expect from tomorrow's meeting, and what should be actually the viable way that the US President should be looking forward to resolve this issue?
I think clearly there is still some time, and we are talking of the default taking place from 1st of June. So I assume the fact that they still have time could mean that they will be still bargaining, and a clear kind of solution may not appear from tomorrow's meeting, but some indication of which way they are trying to resolve this issue could appear tomorrow. And in any case, the United States has no dearth of people who are willing to buy its bonds and give debt to the American economy. They are the largest debtor nation. In fact, it's interesting to also note, if you have to compare the large economies of, let's say, China, India, and United States, India's debt is about 19% of India's GDP. China's debt is about 45% of its GDP. But United States debt, it's interesting, is only 133% of its total GDP, which means that it has a goodwill where people are willing to constantly go and invest and give, sort of buy those bonds of American government. So on that kind of note, I think it fundamentally kind of breaks down to political bargaining rather than American economy being in any serious crisis. But when you have a political sort of tussle on very bipartisan kind of equations, it does impact. For example, I think you mentioned initially the kind of confidence level of investors. Among others, hundreds of Indian companies have invested in the United States. I think about more than $40 billion of Indian investments are in American markets. So investors' confidence gets impacted upon, and I think to some extent, dollar could also become weak I mentioned that the commodity prices would start soaring. So some of those ripple impacts may begin. I think that is something we need to control, and I suppose they will keep that in mind, that impact should not happen. But fundamentally, if one is looking at this being a major threat to American economy, I don't think it's a major threat to American economy, even in worst case scenario.
Now, since you mentioned that it is a political crisis largely, and US President Joe Biden also said that people should avoid manufactured crisis. How do you sum up this statement by Joe Biden?
Very clearly, see, in the presidential election year, the incumbent president, who has also expressed his desire to contest, would like to continue with the social spending, so that that kind of goodwill is constantly generated, and tax cuts would again help. But of course, taxes should not be raised in an election year. But Republicans would like to push Biden administration exactly in that direction of pushing it to raise taxes and cut on social security spending. So that way it becomes kind of a ping pong ball between two political parties driven primarily by elections, presidential elections coming. And I think that is where the kind of point scoring is likely to guide that kind of negotiations. But fundamentally, I think both parties understand that it's not something which should actually be pushed as far as to actually lead to the United States defaulting on its payments, particularly to those interest payments for its creditors, sorry. And in that sense, that may not happen in the end, but it's basically point scoring and pushing each other, and earning some brownie points in political elections.
But downgrading is also a possibility over here, because the markets are also indicating that a AAA category, US can come under that AAA category. What exactly is it, and how much of an impact is it going to create on the investor especially?
That definitely, yes, that has an impact, and credit ratings, downgrade for U.S. economy would matter a great deal, because much of the world has invested in American economy. So, U.S. market attracts huge amounts of foreign investments, and any lowering of credit rating has that impact on investors' confidence in that sense, and per dollar returns for them. It's fundamentally, I think the most significant point is political sort of pushing and shoving from both sides, but also for the global leadership of United States in technology, in economy, in market, sort of in that sense. So that goodwill of American leadership again is something which is likely to be impacted even during the pushing and shoving of these two sides, and therefore I think that is something which needs to be managed well. The Treasury Secretary Janet Yellen has been trying her best to play within those minor technical adjustments within the budget to make sure she can buy more time, and therefore she's been also appealing that that kind of deadlock should be resolved as soon as possible, because fundamentally it's the confidence in American leadership, confidence in American market, and that is at stake in that sense. So I assume that leaders would fully keep that in mind. And when they are sort of bargaining in terms of political interest on both sides, they will not be kind of pushing it too far. And I assume, like in many times before, in fact, 3 times in this last 1 decade only, such deadlocks have occurred and have been resolved over a period of time. And the last one was, the only serious one was Obama administration 2011-12, when finally some social spending cuts had to happen. Otherwise, they have been able to find the sort of solutions before a default actually occurs.
Now, how much of an impact is it going to is it going to show on other major economies?
I think global economy now is increasingly intertwined and interconnected. Any particular part of global economy and stock markets in America getting impacted would have ripple impact on other stock markets around the world also. So in that sense, yes, it would actually impact other markets as well. But of course, other markets may not be impacted as much as United States market would be impacted upon, because it's fundamentally talking about the investors' confidence in American economy in that sense. And commodity prices going up, etc., within the United States to begin with. But yes, it has definitely linked, because America is the largest economy and has enormous impact on whatever happens in that economy. And therefore, I think it's a news that would kind of be something to reckon with around the world for other economies as well. And investor countries would also have to keep looking carefully how this deadlock is resolved.
Absolutely. Thank you so much, Professor Singh, for joining us and bringing us a rounded perspective on the US debt ceiling and what happens next. Thank you. And